Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday the 8th of the 2nd 2021. The time is 0:45 GMT London time. Asian session still going but coming to a close. European session starting to fire up, and our lunchtime is the North American session. So I've written up the flows to start with to get us underway. Friday then the 5th, which was the last full trading day, we had a positive opposed driver in the euro at plus 162. So we had front and back door flows going mainly out of the dollar at minus 158 and out of the yen at minus 93, and we had positive flows of plus 89 in the pound as the positive rock, and that was on activity of plus or minus 251. So last week as a whole then, the overall situation was from Monday the 1st to the Friday the 5th, so that's the whole of last trading week. We had a positive opposed driver in the pound at plus 225. Front and back door flows then fairly even, but mainly coming out of the euro at minus 188, next out of the yen at minus 151, and the dollar was relatively strong as a rock at plus 118, and that was activity of plus 339. So we just look at the intraday then before we do some analysis. So intraday, which is Monday today, the 8th of the 2nd. So what have we got? We've got yen dollar on the negative and euro pound on the positive. Right, so we've got plus 57 on the pound, plus 1 on the euro, minus 2 on the dollar, and minus 56 on the yen, and that's on activity of plus or minus 58. Right, we've just got a positive opposed driver in the pound, positive rock in the euro, negative mover in the dollar, and a negative secondary driver in the yen. Okay, right, so as usual, what's going to knock this around today? Well, today, Monday, then we've got the German industrial production, which is going to be quite relevant, because if you looked at our data cycle for last week video, you'll see that German data is starting to think about rolling off. So this will be confirmation or otherwise of what we thought there. Tomorrow then we've got China's trade balance, which is again is going to be quite crucial because equities are very pumped, and that will have a great bearing on things like the commodity currencies like the AUD, NZD and the CAD, and oil's very pumped as well. Wednesday then we've got German CPI, which is tier 1, which will again tell us where we're going on the German front, and we've got the US CPI, which is also tier 1. Right, so that's this sort of roughly what's going to happen in the next 2 to 3 days. Let's look at the flows then. So Friday, which is the last trading day, we had positive euro, strong euro, and relatively weak dollar. And if you remember, the dollar had been pumped, and then they decided to take it off after the non-farm payrolls, which came in disappointing despite high ADP. So that's what was going on there to a certain extent. And over the week then we had very strong pound, plus 225, and the euro was still getting knocked around to the negative 188. Yen was soft due to the equity transmission mainly, and the dollar, whilst it came off on Friday, had been pumped and was at plus 118 as the rock. Now so far today, which is the Asian session, then so intraday, but this is also because it's Monday, it's also intra-week, but that's just a side issue. Right, we've just got an opposed positive driver in the pound, and you can see that the dollar and the euro, dollar at -2 and the euro at +2, hardly moving, so they're sort of locked in a state of dynamic static equilibrium, if you like, and so the pound is on the up and the yen is really taking the brunt of the flows out, again likely off the back of the equity transmission. And what's happening in equities are sort of above their highs. They're thinking about where they're going next. What else have we got? Right, we've got equities doing that. We've got the dollar index is positive at the moment, but it's thinking about it. And the interesting one is copper. Now copper, I told you, was reluctant to go with the flow, and then it had a bounce on Friday, and now it's starting to. It still looks soft, copper. So that's interesting. So and copper is obviously very relevant to China, trade balance, which will be on the Tuesday. So that links in with that. So let's just grab a cloth and make some sense of the what's going on. Right, well, we gave our positions a lot of thought over the weekend, and the end result is at the moment we're going to stick with them, but we think the main thing we're going to be looking at strongly, I'll write it here initially, is cable, the pound dollar. Excuse me. We expect the pound dollar to be the star to the short side this coming week. Okay, that's what we've concluded. But there you go. That's what we think. We think the dollar is going to carry on in an upward motion, and remember that the significance of the euro data isn't just from Germany and the eurozone, but it's also relative data compared to the US. Now, so what have we got then? So we've got the dollar, the euro, the yen, and the pound. The yen is obviously quite linked to equities. So the equity transmission, right? We think that the pound is still at a model top. So the pound trajectory is down. The euro is mixed. Whilst we said the euro was at a modelled floor, it depends on what pair you're looking at, and we've been heavily involved in the euro pound and getting a hard time of it, as you know. But we're still staying with that long position in the euro pound, but we're monitoring it. Right, so the main focus for us today and early this week will be shorting the pound dollar, and our further modelling, our sort of dynamic compression extension modelling shows that the pound dollar is really getting to the point where it's at an absolute top. So that's what we're doing. Hope that was useful. See you tomorrow for the daily briefing. Thank you very much.